All right. Good morning, traders. Happy Monday. It is August 23rd, otherwise known as Kobe Bryant's birthday. So if you're a Kobe fan today, pop on the jersey. All right, team, let's jump in though. Gonna make this one a little bit short and sweet. I'm on vacation this week, and I'll be real with you. I woke up like 10 minutes ago. Vacation kind of stuff. But team, it's pretty simple for me here. I don't like fighting squeezes. And my biggest mistakes this year have come from not only fighting squeezes, but just trying to short, and we can call it a hedge, but my biggest mistakes this year have come from trying to take trades counter trend. Just the easiest way to make money until this market completely changes is get long the squeeze, buy the dip from a weekly chart all the way down to a daily chart. Path of least resistance is to the upside. So there's so much fear, so to say, in the market right now for a pullback. Get the seasonality aspect. Things are a little bit extended. I don't so much think a pullback is something to fear. So until we get the big old giant pullback, path of least resistance to me is just to the upside. You got trend, you got structure, you got momentum. So as we continue to get these good looking squeezes in the indexes, I just want to continue to get long things like NOW. Got that big three. We talked about this in the YouTube video last night. You got trend, you got structure with your squeeze at the 21, and then you got momentum here. So that's going to be the focus. And there's a few different groups here. Here's the notes. All right, so a couple notes here this morning. I'll show you open positions we got, and then I like the Qs. So Google, Facebook, Apple. I like the communication sector, which is basically also Google and Facebook. So 2 points for Googs and Facebook, and the semiconductors, mainly Nvidia and AMD. But open positions in the mastery, we have got put credit spreads here in NOW. So if any of my mastery traders are listening in here, y'all know the drill. Looking for a move into a new all-time high, pretty much 2 to 3 ATR. So we got NOW. We're out of tractor supply. We got out of tractor supply last week. We've got put spreads on the real estate sector. IYR going to 200. You heard it here first. We got calls on XLC, and then you got a big old whopping weekly squeeze here on the industrials. Trend, structure, momentum. So we get some calls there as well. Couple open positions. But for the Qs, so to me, it's a beautiful chart. So sure, we could roll over. That could be the top, or you're looking at a daily squeeze in an uptrend with stacked DMAs, and probabilities point towards a nice move to the upside. So the big if here is if the QQQ fires this daily squeeze long, we're probably looking for a nice solid trade in a tech stock. So the first one that I like here is going to be Apple. Apple is kind of the epitome of trend, structure, and momentum. So if the Qs can get the party going for a push into 2 to 3 ATR, I don't see Apple not doing the exact same. So great daily squeeze. You've got a 4-hour. You have got a 2-hour squeeze. You have got a 1 hour. You have got a 30-minute. It's a squeeze fest. And you got a 15-minute. Dare we look at a 5-minute chart? You got a freaking 5-minute squeeze too. So I love Apple here. Trend, structure, momentum. It's in the QQQ. The QQQ is also squeezing. The Q's fired the squeeze. I think you got a good swing trade there in Apple. Big Google here. Actually, I take back what I said about Apple. Google's pretty much the epitome of trend, structure, momentum. Probably one of the best trends in the market here. And here we find ourselves with a new daily squeeze. Got your stacked DMAs, got the green 10x bars. I like Google here a lot. I would prefer a little bit of a dip, though. Anytime the stock starts to get through +1 ATR, it's just not my favorite entry. So I would prefer Google on a dip here. Do I think we get the dip? Being realistic, no. But you get the daily squeeze, you got the 4-hour. Oh, Google looks good here. You got a 2-hour squeeze, you've got a 1-hour. So y'all get the scoop here. Trend, structure, momentum, squeezage, all awesome stuff. I would take Google on a bit of a dip here. And then last but not least for tech is Facebook. Good looking daily squeeze. I say last but not least for tech because there's no structure here for me in Amazon. So it's all about the setup. Even if I like the way the QQQ looks, and yeah, if the QQQ makes a nice move higher for the next, say, week to 2 weeks, then there's certainly a good chance Amazon gets a good push here, but that's not the setup we trade. There's no squeeze, there's red 10x bars, you don't have trend, you don't have structure, you don't even have momentum. So I love Amazon. Oh, I love me some Amazon, but I'll trade it when it looks like that. Or I'll trade it when it looks like that. So that's why I'm kind of ignoring that one right now. In Microsoft, apparently I'm just not quick enough for this one. You go from the 21 EMA to 3 plus, let's call it 4 ATR in 2 sessions. So there's another one. Trend, structure, crazy momentum. So I'm hoping here, not AAP, not Advanced Auto Parts, but I'm hoping Apple and Google and Facebook could have a little bit of the same in store as Microsoft there. And then Amazon can just do its thing. I'm going to let Amazon do its thing. So QQQ, you got Facebook, you got Applebee's, and you got Google. All have trend, all have structure, all have momentum, and they're all part of the same gang. It's a good mix there. Now the next group is the communication sector, XLC. And I like XLC because why? We have trend, structure with a nice squeeze, and you got momentum here. A couple of the green 10x bars, you got stacked DMAs. So when we're looking at XLC and we're talking communications, the 2 biggest names in this basket in the ETF, funny enough, is Google and Facebook. So I already like Google and Facebook because they have a good looking chart and because they're part of the Qs here. I like them even more because of the 2 heavily weighted, most heavily weighted names in the communication sector. So even more reason I think to like Google and Facebook here. You also have names like Comcast in XLC. And Comcast, very much like Facebook and Google, has trend, structure, and momentum. Great looking daily squeeze. Very, very nice 3-day squeeze. And quite the beauty here for the weekly. So there's another group I'm going to focus on. XLC, communications. And again, that gives you your Facebook. So 2 points here today for Facebook, communications and tech. 2 points here today for Google, communications and tech. Maybe 1.5 points on a dip here. And then Comcast. Albeit not as sexy as a Facebook or a Google. You don't get as much clout trading a Comcast, but we're here looking for good trades. Comcast is a pretty good setup. So I like that group. And then last but not least is the semiconductors. And I don't so much like the daily chart here. It's a little bit sloppy, right? There's no stacked EMAs. There's, worst of all, there's no squeeze. So that's a big no-no. And everything else is kind of neutral here. So not a huge fan of this daily chart. What I am a fan of here, though, is the weekly. The weekly has everything I'm looking for. Trend. And if you want to get a good gist of the trend, really good trend. You do have structure here with a nice weekly squeeze, and you have momentum. stacked EMAs, the histogram is positive. So you got the big three here on the weekly chart. But what I also like is you got the pullback to the 21. That's one of my favorite pullbacks in an uptrend, is the pullback to the weekly 21 EMA. Just right. So for conversation's sake here, you still got bullish momentum. Right? You're in a beautiful uptrend. Structure is good. Momentum is intact. If the trend is going to continue here into the rest of August, into September, into October, of course we could go lower from here. But just in terms of structure of the trend, you typically pull back to the 21 and you don't bounce back towards all-time highs immediately. More often than not, it's a week, maybe 2 weeks of a chop fest, but then the trend continues. That's the push I want to catch. I want to catch that push. And then I want to wait for the pullback. It might take a week, 2 weeks, 3 weeks to get it going, but that's the push, right? That's the push. So here we are again, pulling back to the 21 EMA. So in plain English, this does not have to be support, but if the trend is going to continue right away here, it's kind of the most realistic spot to at least look for support. So I think you drop in a level of 250-ish, and you give it a couple of weeks here. But the weekly chart looks beautiful. So if the trend does continue, and for conversation's sake, let's say, what's today's date, the 23rd? Let's just say that 4 weeks from now, September 23rd, the trend is continued. And we held support, and we turned a corner, and you're making a new push into all-time highs here. You want to be long a few good-looking semiconductor stocks during that push. You don't want to come in here looking to get long semis after the push. Just like a daily chart, we want to get long here, take profits on that push. Get the hell out of the way, get long here, take profits on that push. So if we end up at all-time highs 2, 3, 4 weeks from now, then isn't the time to be looking to get long. Now is the time, after the reversion to the mean. So with that being said, the first one I like here is Nvidia. No surprises here. Great weekly chart, trend, structure, momentum, and you got a great looking daily squeeze here. My only complaint and the only reason I can't trade it is just a little bit too extended. So I want to get long here, and I want to catch 1, 2, maybe 3 average true range moves. If I get long here, maybe I got like a quarter of an average true range move left into 2 ATR. Maybe I got like 1 1/4 up into 3. The entries at the 21 just give you the most potential reward, in my opinion. So I would not chase Nvidia here. If you're already long Nvidia going into the week, I'm jealous, but I would definitely take it on a dip. Again, kind of like Google, just being realistic here. I don't know if we're going to get the dip. I mean, where we set the open this morning, you got bid and ask at like 211. Yeah, that ain't a dip. That ain't a dip. But you got a good structure, so keep an eye on it. I would BTFD on Nvidia here. But then another great looking opportunity, I think, in the chip makers is AMD. Stacked DMAs, a bunch of green 10X bars. Right, so you're trying to kickstart a nice trend here, and you pull back to the 21. So this is where I wish I could get long Nvidia right now. Doesn't seem to be the case. So we don't have a daily squeeze, though if we just continue to chop here for a few more days, I bet we do. But you have a good structure. You've pulled back to the launching pad here. So we already know, even if there's not a daily squeeze, a lot of the best moves tend to start right here at the daily 21. So we can compensate like a guy with a big pickup truck, and you can look for a squeeze on a lower time frame. So you got a 4-hour here. You got a 2-hour squeeze, all good looking stuff. So you get what I'm picking up. You're picking up what I'm putting down, rather. If 2, 3, 4 weeks from now, SMH has just turn the corner, trend continues, the semis are at an all-time high. Now is the time to start to plant a few of those seeds. We don't want to come in here in 3 or 4 weeks and sure enough, AMD is back into a trend and is just up here at 125. We're not trying to get long up there. We're trying to get long now and potentially take profits on that push. So I like AMD a lot. I pretty much like anything in the semiconductors, so long as you have structure, trend, and momentum. But for me right now, this is it's really the bulk of the focus list. I run my scans. I'm definitely looking for things like an NOW, where quite frankly, I'm not sure what group NOW belongs to, but it's just got a beautiful trend, squeeze, all that good stuff. So I'm going to keep looking for trades like this, but in terms of the core of it, the core of the opportunity or the focus is those stocks that are related to good-looking sectors. So QQQ, Facebook, Apple, Google, XLC, Facebook, Google. Potentially SMH here with the weekly pullback, Nvidia on a dip, AMD. To me, that's going to be the major focus. And I'll show you a few different good-looking setups here that I'm also going to keep an eye on, but I just, thinking back to a trade we had here in Goldman, if you can find trend, structure, momentum in the individual stock like you had here for Goldman, but the group also has the same thing, those are my favorite trades. So that's the bulk of the focus right now. And then just looking for good setups outside of those groups. So NOW, I couldn't suggest an entry here. A little bit too extended, and selfishly, I hope you don't get a pullback because I'm trying to get our profits here. So good looking setup. I think a bit too extended. What's this? O'Reilly Automotive is actually a great looking squeeze. So it's not a Tesla. It's not an Nvidia, not an exciting name, but trend, structure, momentum all day long. So O'Reilly's looking pretty good here. Another one is IDXX, IDEX Laboratories. Dexter's Lab has gone public. Trend, structure, momentum. That looks really good. Next up is Otis. Old Otis here. And you got the big three. So I like that one as well. Etsy is an interesting squeeze here too. So check out Etsy. I like the daily squeeze. I suppose the one knock I could have against it is I kind of prefer this daily squeeze right here, where the move into the squeeze was to the upside. Meaning you got some trend there, then you pull back, then you go into a squeeze, then you continue the trend. And then you go into a new squeeze, and you continue the trend. You've lost a little bit of directional momentum here. So one thing to take into consideration, however, you got a weekly squeeze here. Maybe not this month, maybe not next month, but at some point, the weekly squeeze continues to kind of turn the corner, momentum shifts. You could get back to a bit of a trend. So I do like the weekly. And the daily looks pretty solid as well here. Coca-Cola. Not the cleanest, but I think notable. A notable squeeze here. SE. C Limited. I would take on a pullback. So if y'all like these, and when I get off the mic, I'll make sure I tweet out the watch list here and put it on Instagram just in case you want to come back and take a look at this later. EQIX, good squeeze, good stuff here. DoorDash, who has just the most ridiculous fees in the world, but has got a good squeeze here. NET is really clean. Trend. Got a squeeze here at your 21, so you have structure. And you got stacked DMA, so you got some Momo. So NET looks good. ZS looks good. Chipotle looks really good. Chipotle, kind of similar to Google here. just non-stop trend. You got structure with a brand new daily squeeze, and you got green 10x bars like everywhere right now, everywhere. So I do like Chipotle. I would like it a little bit more on a dip here, but I think Chipotle looks good. And my friends, that is about the gist of it here. NOW, O'Reilly, IDXX, Otis, Google, Etsy, Apple, Comcast. But I'll make sure I tweet that out after for those interested in jotting some of those down. But as we wind out here, heading into the open, S&P 500 looks good. So pretty clear mission here today. It is mission crack through the high. That's the Qs, I'm sorry. Here's your S&P 500. So we can plop in an all-time high right there as well. So that's what I got for you, y'all. Keeping it simple. Tech, semis, communications, a couple good-looking setups within those groups. And that's about it for now. And if and when the market tops out and pulls back, then I'll change my game plan. But just zero interest. Zero interest in trying to fight this thing. And listen, if you got 90% of your account in long calls, then yeah, by all means, go get a hedge on. Like, for the love of God, get a hedge on if you got basically your whole account in calls here. But if you're just taking 2.5%, 3% position sizes, you got a couple good-looking trades open at once, and most importantly, if you've made some damn money throughout any point of this uptrend, you shouldn't be stressing the pullback here. If it happens, it happens. But for now, I'm looking at a daily squeeze with stacked EMAs and an uptrend. It's something I typically don't want to try to fight. Rather, I'm going to latch onto it and take it for a solid ride. So that's what I got for y'all. Let me get caught up in the chat here. See if you got anything good for me to take a look at. Let's trade. If it fires short, then everything I said this morning pretty much goes out the window. So let's just pick on a few names here. Google, Facebook, Nvidia. S&P 500 fires a daily squeeze short. It's going to be very unlikely that Nvidia kind of bucks the entire trend. It's going to be pretty unlikely that a Google or a Facebook bucks the entire trend. And from another perspective, the reason that I like Facebook and Nvidia and Google so much right now is because I think the squeeze is going to fire long. So you always need that context. We can sit here, we could look through hundreds of good-looking charts this morning, and I think we looked at some really good-looking ones, but at the end of the day, this is Big Mama right here. Where Big Mama market goes, it's where most of the stocks on your watch list are going to tend to go. So if this daily squeeze ends up firing short, I'm not trying to have so much long exposure because the odds are the setups aren't going to work if they do fire short here. Warwick Reed, which I think I've told you before, but I like your name. I agree with you though, Warwick. Snapchat is really solid. So I think Henry from Simpler has been doing a good job of covering this one. Warwick, here's what I like about it. You got a beautiful weekly chart. Right? So you have this weekly squeeze going into earnings, ready to go for it. Like really ready to go for it. And then they announce earnings and you get a modest little pullback here to the 8 EMA. So I would say until this drastically changes, you got such a good uptrend here. And I think you had a slight interruption in the uptrend because of earnings. But the key here is that you never lost structure. You never lost trend, structure, or momentum on your weekly chart. Now to take it a step further, all we did was pull back to the weekly 8 EMA, which, study a weekly chart, in a stock with some momentum behind it in an uptrend, that tends to be the pullback. You come to the 8, I bet you had a daily squeeze here. We'll check. Right, we'll check. But here we are again. So if we go check those last few times at the 8, Do we have a daily squeeze? Yes. See? You're finding that moment in time on a daily chart, but the context here is where that setup is happening. It's happening inside of a really strong weekly trend at the weekly 8 EMA. Then you get the resumption of the trend. And you pull back to the weekly 8, you get the resumption of the trend. So from that perspective of a daily squeeze taking place at the weekly 8 EMA in an uptrend, I really like it here. Now, I'm not going to place a bet where I think Snapchat gets back to all-time highs today or Friday, but bigger picture thinking, until this drastically changes, I think the trend continues. So I do certainly fancy a daily squeeze at the old weekly 8. So I like Snapchat a lot. Andrew, my buy zone is as close to the 21 EMA as possible. So a good example here would be Nvidia, actually. So these Keltner channels here on my charts. You got the yellow Keltner channels, you got the purple, you got the red. That just measures average true range moves above and below the 21. So without even having to know what that means, to me, the buy zone is inside the yellow Keltner channels. As close to the 21 as possible, but inside of +1, -1 ATR. Because if I can get my position here, I got all that potential reward. Where for conversation's sake, because I do think Nvidia could really get crazy here, but for conversation's sake, let's just say all we're going to do right now is what a lot of stocks tend to do: squeeze, run to about 2 or so ATR, and then pull back again. For conversation's sake. So if I'm getting long here, I can pocket 1, 2 average true range moves. I got that whole, what's that, 198 to 208. I got the whole $10 change of potential upside here. Instead, though, if I come in today and get long Nvidia, and all we do is get up here to +1 or +2, not too much upside. So for me, this is the buy zone. As close to the 21 as possible, but we got to be inside the yellow Keltner channels. So if you look at Google here, I like Google a lot. It's just kind of breaking my rule, though. I got to get it here in the buy zone, in between +1, -1 ATR. Danny, what's up, man? Danny, that is the 50-period simple moving average. My man, Danny, I hope you're well. Tony, thank you for joining, man. I'm excited to have you in there. So, Tony, in my mastery, I'm live every single Thursday from, what time is it? Try to do the central conversion. From 8:15 to about 9:15 a.m. central. So every Thursday I'm live pretty much for the first hour. Tony, between you and I, don't tell the others yet. I'm thinking about upping the ante and doing 2 to 3 times per week. So we got a schedule where I'm live for about 2 to 3 hours once every month. It's our quote-unquote official live trading day. But I'm in there every Thursday for the first hour of the session as well. And probably going to up the ante a little bit. And if I take a trade, you're going to get the alert right there on the alerts. So Tony, if you're new to Simpler, my suggestion is download the mobile app and then turn on notifications on your phone. That way, if you're not logged in here in a desktop, you'll still get the alert sent to you. Hey, Chris, is focus trades a part of Simpler trading? Yes, it is. As of last November, December, they adopted us. So we are part of the Simpler team. DKNG, that might be another good one. Let's see. Yeah, I don't hate DraftKings here. Let me check the weekly chart. Patience. The only thing I would say here with DraftKings is patience. Because if you look at the daily chart, okay, you got a nice daily squeeze. We're at the 21. Could be ready for a nice push. Definitely. From another perspective, though, and then I'm going to compare this chart to Tesla. From another perspective, though, you're trapped inside of a weekly squeeze. There's a beauty to weekly squeezes, and then there's a negative, so to say. The beauty of a weekly squeeze is once that sucker finally fires, like Nvidia, it's I mean, aside from Mother Nature, it's like one of the most powerful forces in the world is a weekly squeeze that fired. But look how long it can take here. I mean, look at Tesla, right? Just weekly squeezing, weekly squeezing, weekly squeezing. So if you find a good looking daily chart, right? So let's say DraftKings, you find a good looking daily chart like a DraftKings, but you're also trapped inside of a weekly squeeze, I suggest you try to play that one of two ways. You could play it like I'm trying to play Tesla here, which is just basically selling an out the money put credit spread and trying to give it all the time in the world. Like set it and forget it kind of mentality. It's like, hey, I like the structure here. I'm going to take a position and I'm going to forget I have the position. And if the weekly squeeze fires, then I'm golden. That requires a lot of patience. You could instead try to keep your trades short and sweet. So look at the chop fest Tesla's been in here. But you could find the daily squeeze and just take the quick trade. Right? Take that quick move and then get the hell out of there. And let it continue to be trapped in a weekly squeeze and chop and chop and chop. And you get a daily squeeze, you take a quick trade, you get the heck out of there. You get a daily squeeze, quick trade, get the heck out of there. When you're trapped inside of a weekly, those are my two suggestions. Plant a seed and give this thing 40, 50, 60, 70 days to work out, or you keep it shorter term. So you find it something just like this, a daily squeeze at the 21, you build a position, but you're looking to take profits on that push. So short and sweet or set it and forget it would be my advice. My man, Brian, what you got, brother? Got a little bit of Mo? Got a little bit of Mo? All right, let's check out the weekly chart. All right, good call out here, Brian, because it's kind of same discussion we just had with DraftKings here. You got a good weekly. However, sometimes you can have a good weekly chart for, this was September till, that's actually pretty long. You weekly squeezed, weekly squoze. You were weekly squeezing September, October, November, December, January, February, like 6 months here. These things can take a lot of time. So if you're not trying to sit through a trade that long, you're getting long at the 21 and you're keeping it short and sweet. You got to take profits on that push. Otherwise, it's like it sets up, you get a cute little move, and then we're chopping again. And we're chopping. Short and sweet. If you're not looking for a 90 plus day commitment, you keep them short and sweet here if they're trapped in a weekly. Good call out. And then Brian, I mean, it's not the most exciting name in the market, but I got to agree with you here. Hershey's actually looks pretty damn good. Yeah, I got to give this thing more credit. Trend, structure, momentum. It looks really good, Brian. And I'll tell you what, man, I mean, I know one area I can get better as a trader is I got to stop like ignoring names like a Hershey. I got to remind myself I trade a setup, not a stock. Now, granted, I like my Google, my Apple, my Amazon, my Tesla as much as the next guy, but if you're really dedicated towards trading a setup, I mean, look at the weekly squeeze here. Look at the series of daily squeezes you've had here. Both of which we've covered in the options room, both of which I've ignored because it's not Tesla, it's not Shopify, which is a big error of mine. Right? Trend, structure, momentum, good trade. Trend, structure, momentum, good trade. So that's definitely it's definitely one way I can get a little bit better next year. Or, I don't know why I'm saying next year. We got plenty of this year left. So I like Hershey here. Not to be ignored. Not to be ignored. Stefan, absolutely. Absolutely. So I do alert trades even if I'm not live. And then, quite frankly, even on a week like this where I'm quote unquote on vacation, I'm still going to be in my office all day, putting in the work. So if there's ever a trade to be taken and I take it, y'all know a good 10 to 15 seconds afterwards. All right, I'm just getting caught up here, y'all. All right, so I think I've covered everything. Oh, AJ. I can't ignore AJ because AJ's got SQ. Yeah, that's my idea of a vacation, Warwick. Yeah, I like SQ a lot. Just be patient with it. It's I don't want to call it a brand new daily squeeze. Just be patient though. So I think one of the best mindsets you can have if you're going to trade the squeeze is have the assumption that you're probably just going to sit through a lot of +1, -1 until you get rewarded. And don't get me wrong, I love a trade like our Goldman trade where we're long on Thursday and it doesn't look back even for a second. Like, yeah, those are sweet for sure. More often than not, though, you find the squeeze and it's +1, -1, +1, -1, and then boom. A lot of swing traders, though, without that understanding, and this is one of my biggest mistakes in the past, is you get shaken out on that crap. So if you're going to trade the squeeze, you got to have that understanding of what exactly are we trying to find here. My favorite example is Google from earlier this year. That's what the indicator is trying to point us towards. It's literally trying to help us find stocks that are consolidating to the point they can't even make a bigger than an average true range move. But it's a total chop fest. So without that understanding of, hey, this is a perfectly healthy, well-behaved daily squeeze, a lot of traders will get frustrated and shaken out inside of that chop. And then a lot of times, off to the races goes Google. So you take that same mentality to SQ or any other daily squeeze. Got a great structure here, but you got to be comfortable sitting through a little bit of +1, -1. To me, the reward of sitting through that +1, -1 is you get to ring that register once the squeeze finally fires. So that is the trade-off. We're getting in here a little bit early because we want to make the most money possible once it starts to heat up. And when everybody comes running towards SQ and they want those calls and they want to buy that breakout, we're going to give it to them. It's like, hey, come on, Junior. You want these SQ calls that I bought 2 weeks ago, 100% ago, you can have them up here. Like JC says, you feed the ducks. Or feed the kangaroos, I imagine he would say now. So have that patience, but I do like SQ. All right, we got a couple minutes left here, team. All right, S&P 500 is trying to rear its head here. Like the wild stallion it is. You got a good squeeze here in the Qs. Good squeeze. Jim, I want to short, not IYR. Never mind. I don't want to short IYR. I want to short IWM. I was like, Jim, I agree with you. Let's short the hell out of IYR. I'm long IYR. The small caps, though, I wouldn't mind shorting on the bounce here. So keep an eye on that, gang. Let's check out FSLR real quick. Very nice. Now, you don't have a daily squeeze, but you got trend, structure, momentum. So if you don't have a daily, see if we can get a 4-hour here. Boom. There you go. Very nice. Very nice. But the context here is it's where that 4-hour squeeze is taking place. So imagine the stock is a rocket ship. Imagine the 21 EMA is typically our launching pad. Well, we don't have a daily squeeze right now to really give us a gist of whether or not we're turning on those rockets, right? Turning on those boosters. But the 4-hour here looks like it's trying to get it going. So I like that a lot. Very nice. Unfortunately, Kelly, I think with 3M here, guilty by association. I mean, the industrials got a little bit sloppy last week, mainly due to John Deere. So DE announces earnings, not very good, at least the reaction. And that puts a little bit of pressure here on the rest of the gang. So John Deere wasn't that pretty last week. Caterpillar, right? That's putting some pressure on it. So I think 3M, Honeywell, UMP, call it guilty by association last week. Now, I think another perspective, though, remember the discussion we had earlier about Tesla, and I think a few others here. You gotta know when you're in a weekly squeeze, because that has to dictate how do you want to operate in here. Do you want to give a swing trade 60 to 90 days till expiration and just let the weekly squeeze do its thing? From one perspective, that's easy enough, just requires a crap load of patience. Or you're looking to keep it short and sweet. You get long at the 21, you take profits on that quick little push. But I mean, even that can be tough to get here. So I think the biggest double-edged sword in the market is the weekly squeeze. It creates just such a crazy chop fest. But man, once it goes, it can really go. But look at this. I mean, this is like an extreme example. Look how long you were in a weekly squeeze for. And it looks good. It looks good. It looks good. It looks good. And then it finally goes. So nice when it goes. So nice when it finally fires. Because it is like nonstop. But man, can it be tough to sit around and wait for that. Certainly can. Certainly can. Tony, last week you saw the put credit spread 90 days out in NMW. Tony, correct. You're correct. So the more time you give a spread till expiration, the slower you're going to collect your premium. So I think a good example here would be Goldman. In the mastery, we sold a put spread on Goldman on Thursday, and we bought it back Friday for I think 50% of max profit, which I'm never going to complain about. It's a nice, efficient use of capital, so to say. But to your point, if we had maybe 5 days till expiration, we're probably taking like 80% of max profit. We got, I think, 50% of max profit on Tractor Supply Company on that nice push. And I think we had like 30 plus 40 days till expiration. Had we had 5 days till expiration, you're going to walk away with a bigger chunk of your max profit. Now, as Avago triggers an alert here, check this out though. The benefit of giving them time. Granted, if it makes the move you're looking for, you might quote unquote only get 40, 50% of max profit. However, by giving them plenty of time, one of our recent trades in the mastery was a 70% of max profit spread on Broadcom. And we caught precisely $0 worth of direction. We sold that put spread over here, and then we took it off last week. We went absolutely nowhere. But because we gave that trade plenty of time, we were able to sit through a little bit of the chop fest. We had short strikes down here at 470, and a week goes by, we're getting nothing. 2 weeks goes by, 3 weeks goes, 4 weeks goes by, we don't get crap here, but we collected all that premium decay. So there's positives and there's negatives to giving your swing trades, really whether it's in the money calls or put spreads. There's advantages and disadvantages. The advantage is, you give it 30 days, you're giving that thing all the time in the world to work out. And a lot of times, even if you don't catch the move, you can still collect some good premium where, if we took that spread and we had 5 days till expiration, could have easily been a losing trade. So I think you got to take both angles there into consideration. All right, but we are opened up here, so let's take a quick peek, and I'm going to let y'all go. S&P looks pretty solid here. QQQ looking good. So do I get my Google pullback? Drum roll. Nope. I mean, maybe from here, but not at the open. Did I get my Nvidia pullback? I feel like this is going to be nasty. Let's check this out. Oh, oh, it hurts. Jesus. Oh, well, just a trade. Facebook. There's Facebook being a good friend, not taking off without me. Any of you get long Nvidia last week, though? All right, so here's some good news. Apple and Facebook haven't exploded yet. Nvidia is gone. Damn. So you know what I tell myself when I miss an obvious trade? If I got long Thursday or Friday, so if I actually took the trade, it feels good, right? Like we all like to take a winning trade. My life would be no different today. Like I wouldn't have made an amount of money on this one given trade where like the entire like scope of my life changes. It's just one trade. It would have been a nice trade, but it would have just been a drop in the bucket. But still, damn, what a move here. Let's see. Old dirty Tesla is just chopping here today. Industrial's coming back to life a bit, so daily chart looking better. Communications should be decent here. Real estate, decent. NOW. Oh, all right, here goes NOW. All right, gang, let me cut y'all loose here. I'm going to go manage this trade here with the mastery, and I will see you all again on Wednesday morning. So, believe me, I appreciate you spending a good, just about an hour with me this morning. I do really appreciate it. So, go get them, trade well, trade smart, and I look forward to talking with you all again on Wednesday morning. See you then.